So today I'm going to talk about Israeli taxation of trusts. Mainly, I'm going to talk about Israeli resident trust. The table of contents is first, I'm going to cover very briefly the types of trust according to the Israeli ordinance. And then I will cover the Israeli resident trust, which is actually the most common trust. And I will talk about the tax reporting liability of the trustee, the beneficiary, and the creator. So types of the trusts in Israel and their taxation. So the first one is the Israeli Resident Trust, IRT. The trust is taxed in Israel unless it's an irrevocable trust that distributed all income to one Israeli beneficiary, who is the tax representative, or that the creator was appointed as a representative. In all cases, the trust has to report even if it is not liable to pay tax. So the next one is a foreign beneficiary trust, FBT. It's taxed and report only on the Israeli earned income. The foreign resident trust is only a tax and report only on any Israeli income that was earned in Israel. Testimony trust, usually the single beneficiary reports unless there is undistributed income, then the trust must file. Israeli beneficiary trust is actually a new way since 2014 type, and it's a type of Israeli resident trust. The sixth type is a relative trust, is the type of Israeli resident trust, where the tax and the income attributed to the beneficiary can be revocable trust in contrary to IRT, and also, but can also pay a fixed tax rate of 30% or 25%. So Israeli resident trust, the definition. This is a trust in which at the time of its creation, at least one creator and at least one beneficiary were Israeli residents. And in the tax year, there was one creator or at least one beneficiary who is an Israeli resident. And a trust which all its creators died and has at least one Israeli beneficiary resident. Or it's a trust that is not a FRT, FBT, or a TT. From a point of view of a tax residency, it's an Israeli residence. It's subject to Israeli tax law, reporting on all the income from abroad and Israel. So what are the reporting, the tax reporting liability? So as a general rule, if any distribution is made, an Israeli beneficiary has to report his income on his usual tax return. That form is called 1301, and it's a common thing that many people in Israel have to issue. The trustee is the default taxable entity, according to paragraph 75. Well, I'll say it in Hebrew because it's easier, 75 Vav Aleph, for the income of the trust. So there are some exceptions to the trustee being taxed. So the first one is attribution to the beneficiary or the creator, combining the private income with the distribution from the trust. So that means this is a cumulative tax with personal credits and deduction and so forth. So the second exception is when the creator or the beneficiary are assigned to be the tax representatives, and they are taxed as if they're the trustee. Beneficiary will be such only in Israeli testament trust. Individual trust brackets are applied and no personal deduction and so forth. So let's start with the trustee. The trustee will be usually the tax liable to tax according to the individual tax rates with no exemptions, deductions or credit, but foreign tax credit. In some cases, the trustee will not be taxed if the creator or beneficiary in a testament trust were assigned as a tax representative. The income reported on the trustee will include all income unless it was attributed to the beneficiary or creator. So the trustee, the form is a 1327. The income is taxed as a single person tax basis. That means the progressive tax brackets. It usually has limited exemptions and deduction, and the tax is high if any distributions weren't made during the year. Okay, now we're moving forward to the beneficiary. The beneficiary will report on any income on his usual tax report, but in a non-revocable fund, if conditions are met where the income was attributed to the beneficiary, this income will be reduced from the trustee's income, and the beneficiary will combine his private income with the trustee income, enabling him to use all exemptions and deductions. So the form of attribution is 142, and the form of a non-revocable trust is form 141. So in an irrevocable fast where the income is attributed, now we're seeing the form. So the attribution form is 142, and the declaration of a non-revocable trust is 141. This is how they look, and also the ITA today has made the translations to all these forms. So the beneficiary, the choice of a beneficiary and trustee to attribute this income will also apply in subsequent tax years, and they will not be eligible to change their choice. The taxpayer of the trust income will be the beneficiary. However, it is possible to collect the final tax that the beneficiary has due to the income of the trustee also from the assets of the trustee and from the income of the trustee. In the event that the income of the trustee is considered the income of the beneficiary as stated above, both income will be combined and will enjoy offsetting losses, exemptions, credits, and provisions. So the creator can be a taxable representative or combine his income with that of the trust. The first possibility, when the creator is assigned as the taxable representative, the income of the trustee in a trust is not added to the income of the represented creator, but rather retains its character as the trustee's income in the trust. So the forms signing the creator as the taxable representatives are form 144, and the usual form to report for a trust now applicable to the creator is form 1327. So the creator in the second possibility is the attribution possibility. When attribution of the trustee income to the creator of the trust, the creator combines its personal income with the trust income and can enjoy deductions, exemptions, and so forth. The form is form 144. And this is the end. In the second part, we'll move forward to the other types of trusts.